where are you overweighting over the next couple of years?
133 million households in the United States, 88 million households own their own homes, 45 rent, 29 are in apartments, and 14 are in single-family homes. And what's interesting is of those 14 million, only 255,000 are in build-to-rent communities. It's a small piece of the pie right now, but I'm excited about that piece of the pie. BTR extends the renter continuum, and so the BTR, I think, is where the industry is going, because it is efficient for home builders to clear off their balance sheets and sell blocks of homes to investors. And there's a lot of capital interest in BTR. It skews towards multifamily, but it doesn't have the headline risk that is perceived to be in the single-family rental market.
Prominent CEOs, leading economists, iconic investors, insights from the experts. The Walker Webcast with Willy Walker. See who's next.
Good morning from Las Vegas, everyone on Western time zones. Good afternoon to everyone on the East Coast who's tuning into the Walker Webcast for this discussion. And hello, Joanna, and great to see you.
Good to see you, Willy.
Nice to have you here in Las Vegas at RETCON, and thank you to RETCON for having the two of us here. I hope you all find this to be a really good, engaging 40 minutes with one of the true leaders in the multifamily industry in scaling BH from being really a small family-owned multifamily owner-operator into a very scaled national developer, owner-operator of not only multifamily, but also student housing, and then also build-for-rent communities, and now owned by one of the largest alternative asset managers in the United States. So let's back up a little bit, Joanna, and start with, you and I first met out in your offices at Harbor Group out in Santa Barbara with Pat years ago. And Harbor was a great small developer, owner, operator of multifamily. And in 2012, you moved over to BH as SVP of sort of strategy. And then in 2013, Harry asked you to become president of the firm. And at that time, and I'd known Harry for quite some time at that point, it was a Des Moines-based owner-operator developer, very successful company, but small. And from 2014 to 2024, you came in and scaled it into third-party management to get to the point where BH now manages 115,000 units across the United States, which puts you all at number 9 on the top 10 list of property managers in the country. You scaled the ownership up to 46,000 units, 48,000 units across the country, high growth markets, slower growth markets, core assets, value add assets, core plus assets. And in the process of all that, added in a lot of technology, which I know everyone here really wants to talk about. So I guess the first question I'd have to you is, you arrived at BH with the platform that was there. What did you see as the opportunity to grow the platform, given what Harry had built up until then?
You're going way back. Thank you for that introduction. That was very nice. I arrived at BH having been a client of BH, and Harry and my partner Pat and I had co-GP'd probably up to 15, 20 deals together prior to that. And I will tell you that Walker Dunlop and your team was one of the very first to take a flyer on Harbor, and you provided the first handful of multifamily loans on the deals that we bought. So thank you for that. You got us started.
Well, we've done over $1 billion with BH over the last 10 years, so I'm very appreciative of what we've done with all of you, but it's all good. It goes both ways, as most things in business.
I know, but back in the day, we had no track record in multifamily. Harbor did not. We were coming out of net lease real estate and grocery-anchored strips and making a transition into multifamily. And we partnered with Harry by accident. It came out of a situation where we found a developer partner stealing from us. And we needed a new management company ASAP as we broomed to that developer partner and had to find a management company that we felt comfortable with. And so we had all the name brands in our portfolio at the time, but I particularly wanted an accounting firm that would forensically look at cash, because when somebody steals from you, all you care about is where is the cash. And so we interviewed all of the flavors of the day, and chose BH not because they could lease or not because they were the most forward-thinking company, but they had great values, great Midwestern values, and their accounting team was top-notch. They reconciled cash like nobody's business. So we hired on a startup, BH, and that was going into 2010, and so we just hit the great financial crisis, and then ended up moving all of our assets over to BH because they were just such a solid operator. And so when Pat and I decided not to raise capital, Harry did. He asked me to come up to Des Moines, Iowa. I had never been to Des Moines, Iowa. I had to look it up on a map. And I live in Ann Arbor, Michigan, and so there was a direct flight down from Detroit to Des Moines, so I took that flight and I sat with Harry for the day. And coming out of that meeting, I had no idea what I was going to do at BH, but Harry and I had great chemistry. And so I signed on. And I was going to do some special projects. So we were still co-GP'd in this critical mass of assets that I was asset managing on one side, but then working for BH as a property manager. I knew nothing about property management. I came from a different world, from asset management, capital raising, and the financial side of the business. And so I had no idea what I was getting into. But I was going to do some special projects because we had used the other management companies across our portfolio, and there were some things that BH was not doing that I wanted to do. So I put my head down, did some special projects, and Harry appreciated that and asked me to manage the company, the property management company, shortly thereafter. And all of that growth that happened thereafter was a byproduct of bringing in super strong team members that are still with us to this day, reconstituting the management team, and then just actually looking at the property management business as asset managers.
Start a legacy. Start turning dreams into realities. A better world begins with you. Better communities start with us.
You make it sound very simple, but it wasn't simple in any way. The scale that you all built over the last decade, super difficult to achieve. And I appreciate the Midwestern humility as you talk about that. But what if you think back on that journey, particularly given that you didn't have deep experience in the in the property management space, what was it that allowed you to scale the third party management business as dramatically as you did?
Well, first I hired people that were a lot smarter than I am in property management and promoted them also from within.
There you go again with that Midwestern humble pie. Keep going. It's all right.
And one of the things we did in 2016, and Walker Dunlop was doing the same thing around this time, because I remember sitting in a room in NMHC and exchanging, ideas around the tech platforms that we were building. And what we did is, one of the smartest people I hired, Brandy Daniel, who's now our chief data officer, she and I wanted to view our portfolio holistically. And that was back in the day when we were drowning in a sea of Excel spreadsheets. That's how we managed the business. And there was no quick snapshot or look at the data that happened yesterday or a portfolio view other than what was in Yardi. And so we ended up backing a small startup company that visualized our data, that would ingest the data and visualize it. And that was before prop tech and all of the tech hit our sector. And so we were 45,000 units at the time. And since we were worried about actually blowing that company up with the size that we were at that time, we invested in that platform and did all kinds of things that in retrospect we probably shouldn't have done, but it taught us a ton. It enabled us to build our own data visualization platform alongside as we learned what they were doing, and that platform was soon bought about a year and a half later by one of the other major platforms and kind of disappeared into that company. But we had our own platform then, and then we were able to launch other technological pieces around a data group that we built internally. And we were one of the very first multifamily companies to do that. And that attracted the third-party management. It attracted the institutional capital that was hitting our business and our industry. 10 years ago, multifamily was behind the other asset classes in real estate. And we really catapulted forward in the last decade because of the institutional capital that was there with their demands for data and information.
Talk about when you talk about data visualization, most people sit there and say, oh, data management, the algorithm came back with some number that said to us, oh, buy there, sell there, add resources there, whatever the case might be. When you use the term visualization, what does that then allow you to do? In other words, what was it that came out of that data visualization that said, okay, this is going to guide either a strategy, deployment of capital, or management of resources?
It is the democratization of data. It is ingesting all of our operational, financial, our Google scores, our work orders from SitePlan, all of the different databases that we use within our ecosystem. We put that into one place, our data lake, and we're able to visualize the exceptions that are happening in our business so we can make better operating decisions. We started out simply, and it's a lot more complicated now. Now we call it BH Fusion, and we have names for everything that we do. However, it started at a simple premise that we wanted our asset managers, our clients, our investors, and our team members all to start with the same data and the same exceptions that were happening within our operating sphere. And so we could solve the problems instead of having to find them. And we would speak the same language. So in 2016 or 17, one of our management conferences, we rolled out our data visualization platform and spent a day with our regional managers and then our community managers teaching them how to use this platform, and which meant teaching them financials, which mean financial metrics, how to use this system, what to look for. And so we raised the bar across our company to be able to talk to institutional capital, to be able to talk to asset managers with these individual multi-million-dollar businesses that they were running. So it became a vital tool to make really solid operational decisions, to limit the amount of surprises, and to get ahead of trends before they were entrenched.
And the value of that information clearly went to your clients whose properties you all were managing. Was there a Fusion plus for BH as it relates to the buy side and using your own capital to go buy assets?
Absolutely. So all of that Fusion data is imported by our acquisitions group. And so they understand what our per unit costs are per market, and they can extract all of that data very easily. And when we make acquisition decisions, the beauty about being an owner-operator is that you can't blame the manager because you are the manager. So you have to make sure that the regional vice president, the regional manager, and the operating teams buy into your investment strategy and that individual asset business plan. And so it's all interconnected. We all use the same data, and we're able to look at performance in submarkets and understand, okay, Kansas City, we like Overland Park. We like Creve Coeur in St. Louis. We like, certain submarkets because what the data tells it and the feedback that we have coming from the operators within that market.
And when people hear you talk about Fusion, is there the opportunity for third-party software that focuses on a specific segment of the market or prop tech or fintech that can be integrated into Fusion that would say to somebody, hey, they ought to come knock on your door? Or is it all bespoke, built by you all, and actually kind of got all the various bells and whistles covered?
So we use a combination across our platform of things that we develop and then things that we use off of the shelf. And our goal is always to use a platform that's off the shelf so we don't have to develop. And if we use that, then we use an API into our database, so we grab that data. But BH Fusion was the start, and since then we've built a revenue management tool, we have built a budget tool, we have a marketing digital media placement, A-list it's called, so we place all of our digital ads ourselves. And so all of these platforms are built with a single focus, which is to decrease operating expenses and improve NOI. And so when we introduced our revenue management platform, we purposefully priced it below the other offerings in the marketplace because we're owner-operators. And that it was important for us to have a great tool that performed better, and it was also less expensive.
And have you thought at any point, and we'll get to the Pretium acquisition of BH and all that, but during the period of time of building up that software platform and the visualization of the data, did you think about potentially spinning that out as a standalone technology company?
We've talked about that, but we've developed everything for our own use. And so if somebody knocked on the door and says, hey, we want to buy your revenue management platform, we would entertain that. we wouldn't want to offer that to the market ourselves because we are in the business of managing properties and not data and tech and software. What we have developed internally is to make us a better operator in the multifamily space.
And as you talk about revenue management and software, I can't help but go to the suit against RealPage that is out there today. You all have been outside of that, to my knowledge, correct? You all haven't been named in that suit, no. And I guess my question, go ahead.
I'm not going to talk about that on advice of counsel.
You can't talk about that at all. Okay, so we're gonna move on beyond that topic really quickly. I will say, because I work with a lot of the companies that are named in that suit, I do find it very interesting in our world that is trying to figure out where AI takes us tomorrow. You can listen to the comments made at the World Economic Forum by some of the leaders in AI talking about how fast AI is innovating today. And there isn't a company out there that is either using AI or using algorithms to try and guide where their companies are going and where they are setting pricing. Amazon spends every single day with algorithm after algorithm figuring out exactly where to price products. So the concept that the Justice Department came at the multifamily industry, this is Willy Walker speaking, no, not Joanna, but that the Justice Department came after the multifamily industry and somehow accused it of trying to set prices, has always said to me that it was a sort of an ill-founded lawsuit. But we will see how that all plays out, and I totally get the fact that you can't comment on it. Let's switch gears for a second, because once BH had built this great scale, it surprised the markets that you all got sold to Pretium. BH always was very focused on the consumer, on the client, on being a Midwestern company, and then all of a sudden you're acquired by one of the largest alternative asset management companies in the world. As I look at Pretium, it's filled with really smart people with a lot of Harvard and Yale degrees and Goldman Sachs and Morgan Stanley backgrounds. How did you all decide to be sold to Pretium? Did you go out looking for Pretium specifically, or did you do a more broadly marketed deal to say BH is for sale and let's talk to some potential acquirers?
Great question, because I think we did surprise the market when that was announced. And if you go back in time to late 23, BH was at an inflection point. We were all the things that you just talked about. We had grown wildly. We had a great, awesome senior management team. No problem is too big or complicated for them to tackle. We had scale. We had data, technology, innovation, great reputation in the industry. But what we didn't have was a strategic capital partner or a fundraising desk. And we were looking at what was potentially going to be a very impactful buying opportunity in the multifamily industry. I've been saying that for 18 months. It hasn't happened yet. We know it will. We also had a wonderful but aging founder and no succession plan for that founder. And it's hard to raise capital around that fact. So we, at the board level in late 23, we had a conversation about what's next. What got us here was not going to get us there strategically. Where was BH going to go? And Stone Point was a minority interest through their family office holder of the management company. And so the board decided that we would hire an investment banker and we would test what was out there. We would potentially sell or recap the management company. And so we hired Center Cap Group, and it was a great choice because Center Cap had just been on the buy and sell side of a couple management company assignments in the industry, and so they knew who was looking for a multifamily operating partner. And we were quiet about going to market, though. We didn't want the industry or the BH team to get rocked by a potential sale. And so Center Cap invited about 20 companies, international, domestic, all flavors, all structures, and we met with those. A very small group of us met with all of these companies, and we narrowed it down to 3 different choices, and of which Pretium was one. And then I did something that I was told by numerous people not to do. I was given all this advice about not doing what I was about to do, and I invited our 14-member senior team under the tent. And I was told that that would create drama and that would get out into the marketplace, it would get out into the company, I would lose team members. Don't do that, Joanna. Terrible idea. I did it. And we, as a team, went through the due diligence, extensive due diligence with those final 3 companies. And we were all in the room, and my whole senior team presented. They did more talking than I did. And I think we impressed the heck out of each of the 3 of them with how passionate and intense and collaborative that team was. And I think it was actually an important part of the sale in retrospect. And Pretium stood out from the get-go as great personalities, great culture, entrepreneurial, hard-charging, data-focused, innovative. And we can talk a little bit about Pretium and where we fit in a moment, but they were head and shoulders above the other companies. And so while the senior team didn't have a vote, their opinion was very, very important. The board voted on this, but the team had their opinions. And yes, was there drama? Yeah, there was a little bit of drama. There was the uncertainty of change, amongst the senior team. We had to address what's going to happen to me and what's going to happen to the company. We had to talk about the status quo as going backwards, and we had to do something strategically to go forward. And so we had all of those conversations while we were going through due diligence and while we were talking to these 3 and then making the choice for Pretium. And so when we made that announcement to the marketplace and to our company, that senior team understood the why. They were able to explain it to their downstream teams. They were able to take all those phone calls, because our phones all blew up when that announcement hit the wires. And they were right alongside. So it turned out to be one of the better decisions, but it just goes to show the strength of the senior team that is still in place and moving BH forward now under Pretium's umbrella.
Pretium, I believe, has 6 operating companies that it now owns, that it's essentially taking a strategy of we can raise the capital and then, if you will, use those 6 operating companies as sort of our distribution network. Is that a fair way of looking at it?
Yes. And so if you look at Pretium, it is more than an investment management company. It is really a residential housing ecosystem. And each of those investment strategies is vertically integrated with an operating company. So obviously, BH is the multifamily and BTR operating company supporting multifamily debt and equity, as well as BTR strategies. And I'm going to do a commercial alert here, commercial break. We are going to market with our first multifamily debt fund next quarter, and we will be providing loans to construction, value add and bridge loans to multifamily operators and developers, so non-recourse loans. And my partner in all things multifamily, Karen Colvin at Pretium, will be heading that up and will be supporting it. So really excited about the expansion into multifamily debt with multifamily equity raise coming later this year.
So
and then,
did I just hear you say you're becoming a competitor of mine?
In a small way, yes, Willie. There's plenty of business for everyone in this.
I have to tell you, all of my clients seem to be competitors of mine today. We're competitors of a lot of theirs, and they're competitors of ours. It's just sort of the way the world is turning as it relates to increased consolidation and where the capital flows are going.
Very true, but we're still going to buy and sell assets with you.
You do, and then hopefully finance them with us afterwards.
Exactly right. And then Progress Residential is the single family manager of the scattered platform, over 100,000 scattered homes, and I have an incredible appreciation for how hard and nuanced and complicated that business is, because we get to now work very closely with them across the residential platform. And then Deep Haven and Celine originate and service non-QM mortgages, and then our West Coast-based Anchor provides home builder finance loans, residential transition loans, et cetera. So no one owns the intersection of housing and data like Pretium with all of those residential housing touch points. But how BH fits into that platform is kind of an easy fit for us. Don Mullen started this business coming out of the great financial crisis the hard way, very entrepreneurial. He bought 55 to 60,000 homes one by one. And then he formed Progress Residential alongside that to manage those homes. And now the company's at 60 billion AUM. That's an incredible entrepreneurial story. Yes, Goldman alum and Morgan Stanley alum are littered throughout the organization, so it's done in a very data-centric, financially focused way. But it's entrepreneurial, and it's strangely, for being a New York-based firm, I shouldn't say this, but very full of very nice people. BH has been welcomed. Our entrepreneurial spirit, our data, our innovation has been embraced. And if you would ask about 98% of the people at BH and all of our clients and investors, they haven't noticed a difference. BH is still, name's still on the door, our culture is still the same. And that was the two true norths as we approached this whole process. We wanted to keep our culture. The BH culture is something special, and we wanted access and to be closer to capital. And I think we've checked both of those boxes.
So if you look at kind of the go-forward plan under Pretium's ownership with 120,000 units under management, 48,000 units of owned in your portfolio.
Let's talk about that. Let's talk specifically about what did Pretium buy. So they bought the management company, obviously, but they also bought the investment management group out of the BH equity side of the shop. So we airlisted our acquisitions and asset management team and our track record, that 30-year cycle tested track record. That also was part of the acquisition because all of those investment professionals came with it. What we left over in equities with Harry as a legacy portfolio was about 100 assets that have some level of BH equities equity in them. And so whether it be 10% on a GPLP basis or 100%. And we signed long-term property and asset management agreements with that portfolio and with Harry so that there is alignment with our track record, with those assets that are on our track record, with Harry specifically, and with Pretium and BH. So we're all tied together. And so as we go forward, that track record is what we'll be presenting to the market and what BH is so good at, which is that value add, operational and renovational lift to B and A- assets. That will be our focus going forward.
So understanding what they bought and what they didn't, as I look at, are we going to see the number of assets or units managed go from 120,000 to 250,000, or is that sort of a business that you're going to underweight? Is the owned assets going to go from 48,000 units to 100,000 units, or is that going to be underweighted? Student, you own 9,000 units. Are you going to go heavy on student, under build for rent? You talked about the size and scale that Pretium has. You all had 40 communities, I believe, before the acquisition. Pretium obviously has many more. And then the final piece would be data and technology and the software platform that you all have put into those assets that you manage. Of those 5 areas, what's getting overweighted going forward as it relates to the Pretium strategy?
As Don Mullen says, option E, all of the above. So we are going to continue to grow the third-party business. That's made us wildly successful. It helps us scale. It helps us stay sharp because we are hearing from all of our clients on what's out there in the marketplace. We may not agree with it, but it keeps us sharp. We will grow AUM on behalf of Pretium. Be Pretium's AUM, we will manage it, but we will be part of that debt and equity raise around the multifamily and BTR space. We are managing all of Pretium's BTR now. We managed for Pretium prior to the acquisition. We were managing for D.R. Horton when they bought the ARC portfolio of 4,200 homes. And even prior to us going to market, we were starting to get some more management from Pretium. So there's great alignment there with our asset management and operating teams. So the answer to your question is we're going to grow every which way.
So given that, and given the economic backdrop we find ourselves in today, really solid CPI print this morning, inflation coming down, and rates go up. Because if you listen to the analysts on television, we've got a trade war going on out there, and seemingly no top to the size of the tariffs we plan to put on Canada and potentially Mexico and potentially other trading partners. And so even though we've got inflation coming down and you should be getting into a rate cutting environment at the Fed, we see the 10-year go up because of the broader economic outlook as it relates to inflationary pressures coming back into the system. That is now into a 4.20 10-year. We had a lot of investment sales activity in the multifamily market back in Q3 of 2024 when rates had come down, cap rates had moved up, so people could...
Rates were stable. Let's just call it what it was, right? The volatility was...
Look, relatively speaking, as you know, rates, we were at a 3.60 10-year in Q3 of last year. I think anyone would say that's rates down from where we had been previously during the Great Tightening. But what you ended up with, Joanna, as you know better than I do, is that you finally got back to the point where you had positive leverage. You could be buying something at a 5.25 cap rate. You could be putting high 4s, low 5s debt on it, and it made sense. And then all of a sudden the 10-year started to surge, even though the short end of the curve was being cut, and cap rates had come down a little bit, and all of a sudden everyone finds themselves back into an inverted acquisition market, if you will. So now here we are at a 4.20 10-year. Cost of financing is in the low 6s. Most cap rates on multifamily are in the low to mid 5s. You're back upside down. So is BH a net acquirer or a net seller in 2025?
I wish my crystal ball was a little bit less foggy than it is right now. What's happening macroeconomically is confusing, to say the least. We will be in the market looking for good opportunities to buy in 2025. We kind of sat on the sidelines in 2024. It was hard to make deals pencil. We did a handful, right? But I think that there are opportunities in BTR. I think we're starting to see a drip of opportunities coming out of the banks. Unfortunately, they are C-class assets right now that we don't feel that the turnaround is the juice isn't worth the squeeze yet, but we're starting to see that trickle coming our way, both for management and acquisition possibilities. But we're going to be looking hard for the dislocated assets where we can apply our operating and our value add skills and create cash flow from where the asset sits right now. So it'll be harder to find. And there's a lot of capital sitting there. But what we've done over the past few years is we've created a centralized platform that enables us to scale our operations and really cut costs and OpEx where maybe smaller companies or aggregators cannot do. So we've got some tools in our tool chest coming out of COVID and spending the last 3 years becoming a more efficient operator with a centralized platform with data and technology that we can apply those and create NOI that wasn't there previously.
So does that, given that you're looking for, if you will, assets where you can apply your management capabilities, does that diminish the need for a strong macro environment behind it? At that, you talked about the U.S. macro environment, which obviously right now is challenging to get any real conviction on which way we're going as it relates to an economy. Are we going into a recession, or are we going to have a soft landing?
Right.
Are rates going to stay stable at a 4.20, or are rates going to go up to 6 or go down to 3.5? I mean, it's a very difficult time to sort of try and project forward on those issues. But when I hear you say that you want to apply BH's management capabilities, there are a lot of our clients who are saying, I want to go into a high growth market that has been oversupplied in the last couple of years. Mm-hmm. There's some assets that haven't leased up that fast, but they're great assets. If I buy them, I'm getting the play of a good, if you will, a macro play in that market that's been oversupplied. I buy it, I take a little bit of pain for the next year, but then it's going to be an undersupplied market, rents are going to go, and I've got a great new asset. That doesn't sound like that's your strategy. You're more looking for an undermanaged, underutilized asset, almost regardless of the market, or does the market backdrop have to be a certain type?
Nope, market matters for sure. We investigate every submarket, and we look in our geographic footprint, which is, the Smile in the Midwest. So we're in 30 states, and we have great operating statistics in each of those states. So we understand the submarkets, we understand what we can do in them in terms of OpEx. But that strategy, I like that strategy as well. We would take a look at, assets that are in lease up, that the market's been oversupplied, and we think we can apply our OpEx strategy there to reduce it with our centralized platform equally well.
So you said the Smile and the Midwest. Most people who invested on the Smile in the Midwest cut off this part of the Smile for some time. Okay, so to anybody in the room who doesn't understand what the Smile strategy is, it's put a pen in Seattle, Washington, draw a smiley face across the United States up to Boston, Massachusetts, and anything that's below that line you buy, anything above that line you don't buy. So that runs down and picks up all of California, it picks up Arizona, it picks up Texas, it picks up Nashville, Tennessee. It picks up Charlotte, North Carolina. It picks up Miami and Orlando. What it doesn't do is go to Chicago. It doesn't actually go to Denver, even though the Smile and Midwest, you may actually make.
And it doesn't go to Des Moines, Iowa either.
And it doesn't go to Des Moines, Iowa either. But the reason I said it cuts off here is that many people over the last couple of years who've said Smile strategy have avoided Washington State, Oregon, and California and really started the Smile in Arizona. Are you still looking at opportunities on the West Coast?
We are not in those 3 markets. We start in Las Vegas.
So I was correct.
Yes.
You're not in those 3 markets.
We're not.
It's the Smile minus the right side.
Right. So we start in Vegas and go up to Richmond. We've got some assets in the Northeast as well. And then we've been finding value in suburban markets in the Midwest for 30 years. So it's a very core part of our business, and cap rates are a little bit higher, and there's good values there. So guess what? People live and work in the Midwest too. So
but that is a very different, I mean, those markets have been great for the last 2 years because they were undersupplied markets.
Right.
So you've actually been able to get rent growth over the past couple of years. But a lot of people sit there and say, that's great, but at some point the bloom will come off that rose as it relates to sustained rent growth, whereas a Nashville or an Austin, while they are oversupplied right now, are gonna get back to looking at, massive rent growth in 26, 27, 28. Are you not suckered by that one?
Not suckered by that one. We've been in the Midwest too long to be suckered by that one. We understand that cap rates are higher in the Midwest. You can get a better basis play, and you can drive rent growth through the value add programs that we're able to apply. So you can buy a B asset and move it to a B plus and create the NOI growth and the returns through doing that.
So finally, on the kind of the macro backdrop and what we're seeing right now, as it relates to cost of labor, cost of to build, the cost of actually buying existing assets, oversupply in the market in 24 and into 25, but probably an undersupplied market in 26, 27. As you look at standard market rate multifamily, you look at BFR, SFR, you look at student, which are the 3 major food groups that you're in right now, and you fast forward of what the current economic policy is today, okay? Where are you overweighting over the next couple of years? Is it standard multifamily because people are gonna need affordable housing and the for sale market is gonna fall off? Is it BFR, SFR because that need to have a detached single family home doesn't go away, but people can't afford to buy their own home? Or is it on student because the university system, actually, which is under a lot of pressure right now, a lot of pressure, continues to move forward and students continue to go to college and there's a need for more student housing?
So I think demographics are a tailwind behind all housing right now. And if you look at, let's put it into context, 133 million households in the United States, 88 million households own their own homes, 45 million renters, right? 29 are in apartments and 14 are in single family homes. And what's interesting is of those 14 million, only 255,000 are in build to rent communities. So I think build to rent communities is a small piece of the pie right now, but I'm excited about that piece of the pie. Harry says it's the future of the industry. And as you know, Harry, he is prone for hyperbole, but I don't think he's wrong on this. I think that BTR extends the renter continuum as people graduate from living in an apartment community, student housing to apartment community. They want more space. They're buying homes. People are buying homes at an older age now, age 38 versus 31, right? So 7 years later, boomers are staying in their homes longer. They're 15 years longer. They're aging in place. And so we have a shortage of single family homes and people are buying later. Think about those adult milestones are all happening later. Buying a home, moving out of their parents' home. A third of 18 to 34-year-olds are still living at home. And so they're having children later. They're buying homes. So we need more rental housing. And as people graduate from the apartment communities, they're going to BTR. They want more space. They want a yard. They want more bedrooms, pets, children, et cetera. And so the BTR, I think, is where the industry is going because it is efficient for home builders to clear off their balance sheets and sell blocks of homes to investors. And there's a lot of capital interest in BTR because it skews towards multifamily in terms of cash flows and somewhat in management, but it doesn't have the headline risk that is perceived to be in the single family rental market. And so I think we will grow around the BTR space faster than we will grow in the multifamily space, but we're starting with a bigger multifamily base of units as well.
Joanna, I'm super appreciative of all we've done together over many, many years. I'm super appreciative of you joining me here at RETCON for this conversation, and good luck with Pretium and the next chapter of BH.
Thank you very much.
Really appreciate it. Thank you.